Hi, I'm Kat Kalashian for Live and Invest Overseas, and today I would like to share with you 5 countries that offer loans for buying property overseas to foreigners. So, are you ready to own a home abroad? And if you're wondering why anybody would want to do that, check out last week's video, 7 Reasons to Buy Real Estate Overseas. But if you are there already, then your global property dreams are within reach in these 5 countries with local mortgages available even to non-residents. It can be more challenging as many foreign banks are cautious about lending to non-residents, and the terms will likely be different from what you're used to, especially if you're an American. Don't expect a fixed rate 30-year mortgage. Those are unique to the US. Shorter loan terms, 15 to 25 years typically, are more common overseas, as are variable interest rates. That said, there are a few places where foreigners can get mortgages even without residency, and here they are. Number 1 is Portugal. In Portugal, foreign buyers can access mortgages through major banks like Millennium BCP, Novo Banco, and Santander. Loan-to-value ratios for non-resident foreigners typically range between 60 and 70%, and as a non-local, you'll likely be required to make a bigger down payment, around 30 to 40% of the purchase price, compared to a local who may only need to put down 10 or 20%. You'll need a Portuguese tax number, the NIF, to apply, as well as a local bank account and the standard financial documents, the passport, proof of income, employment verification, recent bank statements, purchase agreement, and anything else required. Once approved, the home will be independently appraised, and the bank will provide a formal mortgage offer. Rates will vary depending on your credit profile, income, and down payment. In 2024 and 25, interest rates for mortgages are averaged around 3% to 4%. Fixed and variable mortgage options are available. And note that in most European countries that use civil law, which includes most of them, Portugal, Spain, Italy, Greece, banks make life insurance mandatory for mortgages. So terms, therefore, can vary according to the age of the prospective lendee. The eligibility age for life insurance is typically 70 or 75. The closer your age is to this gap, the shorter the loan term you can usually expect. Number 2 is Spain. Spain also offers foreigner-friendly mortgage options, and many expats take advantage of them. In fact, in 2022, 7% of all mortgages in Spain were issued to foreign buyers, according to the General Council of Notaries. Spanish banks typically lend up to 70% of the property's purchase price for non-residents compared to 80% for locals, so not a huge difference there. And you'll need to make a minimum down payment of 30% and show a steady income in order to qualify. Mortgage terms will range from 20 to 25 years, and borrowers typically need to be under 65 years old. Required documents include your Spanish tax ID, your NIE, passport, proof of income, employment contract, bank statements, and credit history, just like in Portugal. Spain's interest rates are very competitive in Europe, with rates between 2.9 and 3.9 for residents and 3 to 5 for non-residents in 2025. Variable and fixed rates are available. Many buyers opt for variable rate mortgages here tied to the Euribor, the Euro Interbank Offered Rate. This is a daily reference rate published by the European Money Markets Institute. Number 3 is Italy. Italy allows foreign buyers to obtain mortgages, but banks do tend to be more conservative with foreign buyers. Not all banks work with non-residents, for example, but your chances are better in urban areas and in tourist-heavy destinations where international buyers are more common. Foreigners are generally expected to pay a large down payment, typically between 40 and 50% of the purchase price. And you'll need to obtain an Italian tax ID, as in the other countries. This is your Codice Fiscale. Open a local bank account, provide all of the other documentation that I've mentioned, passport, proof of income, credit report, bank statements. Most loan terms will range from 20 to 25 years, and the interest rates are between 2.7 and 5% in 2025, though rates may be higher for non-residents. Fixed and variable rate loans are available, with variable loans typically tied to the Euribor. And banks also may require that you insure the property and take out life insurance depending on the terms of the mortgage. Before I get to the final 2 countries that offer well-termed mortgages for foreigners, one is in Europe and one is in Latin America, by the way, I would like to share with you an exciting new publication that we've just released. It's our newest book called The Beginner's Guide to Buying Real Estate Abroad. In it, our in-house international real estate expert and veteran international investor, Leif Simon, who's the co-founder of Live and Invest Overseas, shows you how you can build steady passive income by owning rental properties abroad. This complete guide walks you through exactly what where and how to invest in income-producing real estate in foreign markets. Discover the most lucrative markets, how to calculate real cash flow, financing options, how to partner with trusted local managers, and learn plenty from Leif's own personal experience. He'll share lots of his own personal anecdotes, pitfalls, and how to avoid them, how to navigate things like bureaucracy and tax rules. Learn more about this book by clicking on the screen. We do have a few copies available for free, so click that link now to see if you qualify for a free copy. All right, number 4, Greece. In Greece, foreigners can apply for mortgages through local banks and borrow up to 65% of the property's commercial value, determined by an independent appraisal. Loan terms will range from 3 to 35 years, depending on the country of residence. And lending criteria do tend to be stricter in Greece. So again, you'll need the life insurance to get a mortgage through a Greek bank. And the key eligibility age for life insurance is around 70 or 75. Interest rates vary from around 2% to 5%, depending on the loan structure. And floating rate loans tend to be tied to the 3-month Euribor, plus a fixed spread set by the bank here. Banks do require collateral, usually a mortgage lien on the property, and insurance against fire, earthquake, and other natural risks. In some cases, a cash deposit or a pledged investment account may be accepted as collateral for floating rate loans. The process of getting a mortgage can be more bureaucratic than it is in Portugal or in Spain, here in Greece, but the country does remain a viable option for buyers with solid financials and a long-term plan. Finally, our one non-Europe country on this list, Panama, our shining star. Panama offers relatively accessible mortgage options both to residents and non-residents, with loan terms and documentation which are quite different from what you would expect in the US. Even though Panama and the US are quite similar in many ways, this is where they will differ. So loan terms here are generally 25 years, and interest rates are averaging about 6%, depending on the bank, property type, and applicant profile. Mortgages for second homes are charged a 1% premium, and this is not based on your citizenship. It's effectively any non-resident is charged this premium because the assumption is that Panama property is a second home. However, as I say, it's not unique to you. As a foreigner, the premium applies to Panamanians with second homes as well. Foreigners should expect to make a down payment of at least 30%, though some developers may offer more flexible financing options. Rather than relying heavily on credit scores, Panamanian banks focus more on your ability to pay. So in addition to your completed mortgage application and all of the standard identification documents that we've mentioned previously, you're also going to be asked for recent utility bills showing your address, personal reference letters from your bank back home, income verification, tax returns, and a property appraisal by a bank-approved expert. You may also need to include things like a resume and a letter explaining your investment plans or your reason behind wanting this home in Panama. All of these documents have to be authenticated by apostille or through the Panamanian consulate, and you'll also be required, as in the other countries, to carry life insurance and insurance on the property. The mortgage will be secured with a lien filed in Panama's public registry, and in our experience, mortgages in Panama are adjustable rate mortgages, although rates have not changed much over the past 20 years. While more documentation heavy than some other countries, Panama remains one of the more flexible Latin American markets for expat lending. So if this is on your to-do list, buying a home overseas, whether it's this year, next year, 5 years, 10 years from now, there is no better time to start planning than right now. And the best way to do that is by just educating yourself a little bit about how to get started in the process by getting familiar with different markets. And this is something that our new beginner's guide to buying real estate abroad will do in a nutshell. So click that link on the screen and see if there's enough supplies lasting to offer you a free copy. And of course, if you're interested in more about living and investing overseas, make sure that you like and subscribe. Maybe check out another video while you're here, and I will see you next time. Happy trails.